Hello everybody and welcome back. Well, the last 24 hours have certainly been very interesting throughout the stock, commodity and cryptos markets. The defended zone that we discussed in the previous video held up, and this showed us that buyers were in control for at least that session. But as always, we face a new set of challenges, and one of those is the series of lower highs that are coming through the futures market right now. Does this mean that each rally is being met by selling demand? Well, so far, yes, it has. But if we break that, could we be moving towards the next level of supply, the resistance over here at the 4,300? We know there's a gap there, and it certainly hasn't filled on the real market for a while. So as we move forward, could we be seeing a really nice rally over the next couple of weeks? Let's check out the options to see what the data is telling us, and also take a look at some of the key leading indicators that are really moving these markets right now. Stay tuned. This will be a good one. See you soon. Well, welcome back everybody to the Daily Show here where we talk about stocks, commodities and cryptos. If you like any of those markets, always consider subscribing, and of course smash that like button if you find value in today's video. This is for the market close the 7th of June 2022, and we'll talk about the fear greed index here, which is still showing a fairly decent reading of fear. But we know a little bit better here on the channel. Obviously, we've been talking about the bullishness now ever since those lows that were really reached, the maximum pain level on the SPY, and how that has eventuated over the last couple of weeks. The last session though, what was happening? What sectors were going well? Well, things that have been doing decently well recently, Google and Amazon took a breather, and they allowed certain sectors like healthcare, energy and others to start to pick up. But it was more the session itself that I thought was interesting. What a great day trading session, and what a fantastic morning session to be looking at the open. I did a private stream for this, and if you're ever interested in looking at those, free 7-day trial in the link down below. And we talked about the session open, the support, the demand zone in more detail, and really talked about the key levels where we were convinced that the market buyers had come back in. And come back in they did. They bought very heavily throughout the session. They took a little bit of a breather during the middle, and then of course by the end of the day they were still buying into the close. This is usually where Wall Street places its positions, so in many ways they were also holding the market up throughout the session, which is a good positive. From the sectors, it was all about energy and metals. They were the two best sectors. Industrials also coming, healthcare as we mentioned, tech even doing well, and another favorite recently of the market, which has been the solar index, doing incredibly well. Things like consumer staples and utilities, the more defensive sectors, were down to flat, and that shows you that it was a risk on day, which is consistent with what we've spoken about recently. So we always talk about bull and bear from the action on the markets, and we always talk about sentiment currently in there. Well, there are some reasons to say that maybe we have bottomed for now and that we're getting this rally, but there's also reasons to say that the bears might come out of the woodworks very soon and start to push the market back. And a lot of this is this speculative froth kind of index here. This is really some of the big speculation bubbles that we've seen in the last couple of years. Bitcoin, GameStop, AMC, BlackBerry, Bed Bath & Beyond. They're all much higher than they were at the beginning. So they're still actually holding up. Now, compared to some other hyper stocks, these are doing amazingly, but there's still a bit of froth here to be knocked off this market. So does that mean a further sell-off later on? Another case to be said there is when we look at some of the stats and seasonality around June. We often have a nice little run at the beginning of June, but then we see weakness by the end of June. And remember this date here, the middle of the month, around this third week expiration. This is going to be very important when we look at this later on in today's video and we discuss the options. So the middle of the month, will we see a turnaround where the bears will get control back in this market? Certainly an interesting point. Another thing is people are looking at whether the market or the economy is really sick. Well, here's a really cool drive into some data which just shows you the amount of reservations between 2019 and 2022. And you can certainly see that it is worsening. And one of those reasons is people are feeling poorer. Remember, the market is really made up of two things. We've got supply and we've got demand. While the Fed are, of course, doing changes to interest rates, that is rising them, and most central banks around the world are doing, what are they doing? They're squashing demand. Supply at the moment, obviously a big issue that is due to all the worldwide constraints, especially what's going on in China, that is outside of the Fed's control and in fact and outside of really the US's control. But demand, clearly as seen here, is dropping, and that's going to put a lot of pressure on, of course, the GDP numbers and just in general the economy, and we'll see whether that turns into a technical recession very soon. Let's actually hear from the comments down below. What do you guys think? Do you reckon we're already in a recession? It's almost guaranteed that we're going into one, or do you think that we're going to have a positive GDP number? Let me know in the comments down below, and I'm interested to see what you guys think. But let's get into the charts. Let's talk about the VIX. So the fear index dropped for another day. This is again a positive. It allows the market to potentially go bullish. And we've seen this happen a few times where 25 is held. Every 5 level is basically really important, the VIX. 20, 25, 30, 35. You'll notice we always have a horizontal through 35, as I like that level from a maximum fear perspective. I always look at it and see whether we could potentially be buying capitulation trades on the SPY, those types of things. But the market at this point is coming down, and this could push all the way back down to 20 quite easily. And of course, if that happens, what do we expect? We expect the market to rally towards the next resistance or supply area. Copper, another one of the lead indicators of economic health, it's sitting in the middle. So Dr. Copper, still there. We'll just leave it at that. We've mentioned it so many times. And another one is the DXY, the US dollar. Have we seen money running back to the cash is king safe haven? Well, we have seen it recently. We kind of alerted to it down here. And at this point, I would say that you're actually a little bit bullish on the DXY on the short time frame scale. But in general, I could see it doing one of two things. I've got it boxed up, and I don't really think that it's strong or weak from what I saw here with this breakout and the current movement. I'd say neutral on DXY, and money is basically stagnant in that and could easily switch back into the market at any one point. Remember, funds manage money like this. They have to be invested in equities, they have to be invested in bonds, and they're allowed to hold some cash. At some points, they will try to sell bonds, they will sell equities, and they'll move into a cash holding, but they won't stay there for long. So sometimes watching the DXY can show us that. Another lead indicator that we know is affecting markets at the moment is the US 10-year. So the US 10-year and the US 2-year, those are the short rate and the long rate in terms of interest rates, are both declined on the last day, which is good, but still a worrying trend in terms of the current rally that we've seen here in the US 10-year. We need to see that turn back down and start showing us weakness. If it does, it could point to even further bullish rallies. But if this keeps going up and we see the 10-year going up and the stock market going up at the same time, be very, very scared of that rally. Most likely it will be false. And of course, we'll be watching this on the channel. Let's check out gold then. So how's gold doing? Well, the dollar index has been strongish recently and gold's been holding up fairly well. You'll know I have a bit of a bullish tinge here to gold, but I do need the US 10-year to also drop for it to do well. The key defended zone at the moment sitting around that 1830. We correctly identified that as a community a little while ago. We've got a nice resistance zone here, and of course we have our previous peak supply. So let's just check out the 1 hour chart here to get a better understanding of what the current market conditions look like. Some people might say, Tom, is this setting up like an inverse head and shoulders? It certainly could be. We know that there's orders sitting here. You can kind of tell in the chart, there's definitely orders sitting around that zone. If we breach that, what are we doing? Demand is outstripping supply. Effectively, the bulls are in control and they're pushing the market towards the next direction. We would then expect a pullback and then a rally through. What could that cause? The left shoulder, the head, and the right shoulder. So watch the DXY, and for now, gold still looks relatively strong. We've got defended areas here, and we've got a nice resistance at this zone. Certainly a key level to be looking at over the next couple of days or hours of trade. US oils continues its fairly strong bullish movements up. I'm still very skeptical on oil at this stage, but you can't really deny the trend, and the trend has been bullish ever since it bounced through here. It's trying to make a series of higher peaks and higher troughs. And you can see this kind of double rejection here pointing towards a potential retest of that 124 to 128 zone. Certainly something that you could be looking at. And for now, there's no reason to be scared of the oil trade other than the volatility that's been in it. Other than that, it still looks bullish. Let's move over to the exact opposite in some ways, and that is Tesla, of course, an EV. Let's have a look at what's going on there. Pretty weak last 24 hours of trade. Tesla really sitting behind many other stocks. When we take a look at Apple soon, you'll notice it's not done so well. And I think this is just due to the uncertainty around Elon Musk's move recently, the Twitter stuff and everything else. So we do have a potential here of this really being a head and shoulders inverse. Left shoulder, head, right shoulder. Obviously, we've got the neckline at this point, and then we're moving towards, if we breach that, where's the next level? Well, it's kind of pointing and proofing towards that 950. Wouldn't that be awesome? I'm sure a lot of Tesla people would be happy with that. So we could really see this being a heavy support. It's 700. We know that's a big zone. Previously, when the market crashed, it was purchased heavily off 700, which we certainly were talking a lot together at the time. And this is what we call a defended area. So this level at the moment holds orders. You would have to think that people are fairly bullish on Tesla at this point in terms of the traders, and they're trying to get it through. So there's some of the big levels. Moving into the gap as well that was left here could be another big deal. It's now filled the previous gap. We're ready to move. Tesla looking a little bit better, but of course bears could get in control at any point. New low all the way back down to 600. Could Tesla go? Let's move over to Apple, another one that's looking pretty strong. Good last 24 hours of trade. Again, consistent with this kind of inverse head and shoulders idea with that neckline sloping. It does look pretty strong. It's had a nice kind of session pickup. It did 1.76, which was a good day for it. And from that perspective, it looks okay. So Apple, the biggest stock in the market, showing that it has some life in the bulls at this stage. And of course, if the market continues, what do we expect? Filling this gap is the first step, and the second step is breaching and then moving towards that 156, 57 kind of level. Hopefully we can get there relatively soon. Let's move over to the DAX. DAX looks really good. We've been looking at broad markets recently on the channel. Funnily enough, another inverse head and shoulders, left shoulder, head, right shoulder. That's giving us this idea to get back to this kind of level here, which is around that 14,900, 15,000 zone for the DAX. And it's been really holding up well. You know, the better market to be in recently has been the DAX from the perspective of, I guess, less volatility and more bullishness. And that's why it pays to sometimes look at different markets. DAX really showing it's got some strength in it, trying to get past that 14,616, and it looks like it's trying to do so. Nice daily close here on the futures market. You can see the bullish hammer, and hopefully that continues to run through. The Dow, very similar, very nice trading recently, holding the defended zone, holding up, buyers coming back in, constantly defending this area. We've got the max pain down here. We discussed at great length. We've got this potential for a rally. And where does that rally go towards? Well, here's the big issue. Right there. Could we see bears coming back in at this zone? I think bears will be sitting there waiting for the salmon. That's what they're doing. They're waiting for the salmon like that John West ad. And yeah, I'm thinking that's where they're probably looking to try to get back into shorts. I mean, obviously this is a coiling market we've discussed, but if we start to make a higher high and we breach past some of this kind of slightly negative action in terms of the series of lower highs recently, I think that could really point towards bullishness. And this little complex down here was one of the strong signs in the last 24 hours that we looked at, showing us that the market was prepared to potentially switch. You've got little resistances here, and as the bulls and bears fight it out and move past those levels, there really could be that move towards that next zone. Coiling looks positive for now in the last trade. Another one that's positive is, of course, IWM, the Russell 2000. Really strong trade day for that. New breakout. It's been leading the market a lot. If you want to prove that it's been leading the market, we actually saw it drop the low on the 12th of May. That's before the SPY and the Nasdaq dropped. It's now made a new peak, and that's, of course, ahead of the rest of the market. So is it showing us the signs of the market actually breaking out? This market's already going. Will the rest follow? So far, small caps have led the way, so very interesting there. And of course, the DAX also doing it. Nasdaq, nice defended area, goes a little bit lower during the futures, and this is why I don't use the Nasdaq as the main indicator out there, because it sometimes goes a little bit low. SPY, Dow, Russell. SPY, Dow, Russell. They're the ones, guys. The Nasdaq's cool to trade. I understand why you like it, technology, all of those things, but it's a little bit volatile, and it certainly doesn't necessarily give us the best technical levels. And that's something that I think you'll learn as you really break it down. Do we have a gap over here to fill? Absolutely. Did we end up filling this? Not really. So that's something that, you know, bears will target later. Imagine if we did this. Wouldn't that be pretty incredible. Well, it's certainly quite possible. Market rallied well. There's still a little bit of action to be left in something like this. And at this stage, I'm looking at the SPY to show us the way. So at the time of recording, you'll notice the futures market for the Nasdaq. There it is. And it looks pretty damn bullish from that aspect. Let's move over to the SPY, speaking of which, beautiful level, super defended, top of that box on the US futures. And we held all of this area, which we were trying to go bullish with. It did do so. It's moved back up, and we're just looking for a new high to really solidify that idea that we could move back up here and at least try to get into this gap fill zone, which sits, just so you all know, at around that 42.60 to 42 kind of 80, 90 area. So super important. And we're looking for that higher high breach out of this coiled tight zone. That's really what we're looking for here. US futures, you'll notice it. I've got some highlighted areas that I did last night in the stream. And of course, well, I say last night, you would say in the morning, of course, in the US. And again, if you're interested, you can join the free day 7 trial. Get into our public Discord anyway. A bunch of people were looking at it, and they were trading towards the long side as well in the previous session. So shout out to everybody there. Certainly doing well. As we mentioned at the start of the video, the lower highs, sneaky horribleness. We want to breach this. Why? Because it shows us the commitment of the buyers, or the bulls, or the demand is starting to outstrip the supply. So these lower highs are not so cool. I want to see a higher high to prove that this market is willing to go to that next level. And at this stage, yes, we do have a bullish bias and tinge on this market. Why? It's a mixture of a bond indicator I use and what that's telling me, which is neutral to slightly up at the moment. It's not really showing super strength, but it's certainly there. I'd like a break to be shown with super strength, but it also is because the sequence of events so far, this level in here, this green box, was everything to this market. If it held, it shows the buyers are still in control of this market. All of this is noise on the higher time frames. But if it doesn't, and it breaks underneath, then who has control? The bears. Well, we have to switch our opinion. As traders, you have to be willing to make the change when it's necessary to do so. Let's check out the weekly. Now, why I say the weekly here is if you add a moving average, let's just add the most common moving average of all time, which most people would say is the 20. And we'll just quickly pop this on the chart together right now. Go settings, add the 20. There we go. What you'll notice is, where does the 20 sit? The 20 sits right on that zone. Now, why is the 20 important? Because the 20 is mean reversion. The market loves coming back for a little bit of mean reversion. And often during these, if it is a bear market rally, it comes back to these points. And then that's where the pressure comes in. The false breakouts come in, similar to last time. And that's why we're looking towards that point. Fibonacci's, all sorts of things sit on this level. So a lot of zone really sits around here. And that's why we'll be looking at that moving forward. Let's now check out options. So we've got some options expiration. And we'll look here towards the 10th. And you'll notice the 10th has a 406 max pain. Now that would say, okay, the market could come back further. I'm not so much looking at the max pain for this week, though. It is something to be relevant. Obviously, that would say the market's coming back a little bit further. I'm not sure about that, and I wouldn't bet on the max pain every single week for sure. But we do have this nice 400 put there of open interest, and we also have a decent amount of calls sitting at 420 and 430. So they could put a ceiling in for the end of the week. And when we take a look at the news, you might see where we could be. Maybe sitting at a 420 would make sense at the end of this week. The one that I'm looking at, though, is the 17th. 423 on the max pain. 430 being one of the bigger call levels. And of course, 400 again showing its ugly head, being a point of where you don't expect the market to probably end up being underneath there. Again, points towards potential bullishness in this market. So there's a lot of free reign here, but if the market options were to expire, completely worthless, the way that Wall Street wants, the way the composite man wants, it would sit around that 423 on expiration. And this kind of shows us how this market is setting up here into the biggest options expiration point, the third week of every month. That's the one that matters. Remember, that's the OG expiration. All these weekly options and all these daily options and stuff are not where the biggest orders lie. They lie on the third week of every month. So something very important there. And when we take a look at news in a second, you might see why this Friday as well could be important. Bitcoin did a rally. It's been very sporadic. We've known that this is a pretty key level here. Really anywhere around that 29.5 to 30,000 has been fairly strong demand buying. Bit of a defended zone creation here. We know the 32,000s where all of the nasty bears sit. And if bulls can get through there, that'll be a very positive sign towards Bitcoin. I could see dips being purchased up, possible movements upwards of 36, 38, or even 40,000 again, with Bitcoin recovering quite nicely. It's going to need the Nasdaq to come with it though. As we know, they are partially correlated at this stage. In terms of news around the world, well, my home country of Australia, we chose to follow the US. 50 basis points chucked on here. Big rate hike, more than was expected. And that's just the central bank policies at the moment. Go hard, go fast. Well, not go fast. Go hard, go really, really slow behind the times, but now they're ready to do it. Yeah, they found out that there's inflation there and they're going to kick its ass. That's what they're claiming. ECB press conference on Thursday for New York, could be New York time, could be very, very important. That'll move some currencies for sure and possibly the market. And then we've got the big one here, core CPI news. That is coming 8:30 a.m. New York time, 1 hour before the market Friday. So a lot of potential here. I wouldn't be surprised to see the market at a key point of resistance or a key point of support ahead of that core CPI number, and then for it to be able to break through during that news. That's often how the market sets up. If you enjoyed today's video, please remember to subscribe, smash that like button, and if you haven't already, join us in the public Discord, links down below. Consider, of course, the private one if you're interested. It's free 7-day trial. Links down below. And just in general, thanks so much for subbing. Thanks for the support. And I look forward to reading your comments soon. Bye for now.